Ladies and gentlemen, Joshua Salvetti, welcome back to another lesson from the High Performance Trader. Right, so today I want to break down in a very quick lesson, right, how to identify market conditions and trade accordingly. Right, so I used to struggle very hard with understanding, is it bullish, is it bearish, do I try to capture the reversal, do I trade with trend, how do I know, right, what sets the precedence of bullish or bearish market conditions, right? And in this lesson, I'm going to break down to you, it's structure. Structure is going to tell you everything, whether it's on the 1 hour time frame, the 4 hour time frame, the 5 minute time frame, the 2 minute, right? We identify structure, which paints the picture of either bullish or bearish market conditions, and then we put on trades according to those conditions, right? So before we go any further, guys, click the links below if you want to get involved with a team, right, that not only makes money and focuses on the correct behaviors, right? So we go through this period when we're traders where we're constantly trying to learn as much information as possible, right? But once you've understand how to identify good trades, right, you must be able to repeat this on a consistently profitable basis, right? And how we do this is by remaining present in the present moment, right? And what I do to achieve this is use structure, right? Structure is going to paint that picture. It's going to keep you present. It's going to keep you from making those mistakes that keep you away from profitability, right? So the way I want to break this down, right, is very simple. We're over here on the 4 hour time frame. This is on SPY, right? So we have a bearish trend, right? Why is this bearish? Because we're making lower lows, we're making lower highs, right? We're steadily moving down. This is what I call bearish market conditions, right? This is on the 4 hour. So when things like this are going on, I'm looking for shorts, right? I'm an intraday day trader, meaning I trade from the hours of 9:30 to 4, right? So I'm constantly looking to trade with the long-term trend. See, so many traders get this confused. They're constantly trying to capture the reversal. They're constantly trying to go against the long-term trend, and it's eating out their accounts, right? So, guys, using structure, especially on larger time frames, is going to change your life, right? So basically, I had my eye on this 417.87 level, right? So you can see how I've identified this. Once again, this is bearish structure. So if price can get above 417.87, which is this yellow line right here, this is going to be the shift, the aha moment, right? And that's what we're going to be breaking down today, is when you can identify that aha moment where market conditions are shifting, then you can start to trade with large money. You can start to trade with the banks, right? And then once you're trading with the banks, you're going to find yourself taking way better setups, right? So 417.87 was a critical level, right? Critical level meaning area of value. Area of value meaning an area we're looking for a battle to happen, and whoever takes over or wins this battle, I'm going to trade with, right? So if sellers can defend 417.87, right, I'm going to go short. But if buyers defend this level, right, if buyers invalidate bearish market conditions at this level, that's going to set the story, right, of bullish market conditions. And I always tell everybody on my team, we do not trade price, we trade story, right? So this is what it looked like pre-market. We started to play around with 417.87, right? And I'm going to whip up in the Discord exactly what the pre-market plan was, right? So I dive super deep every single day on the Discord, a bullish and bearish scenario. So this was 11-1. Okay, bullish scenario. So I keep this extremely simple. So over here, right, I'm going, okay, 11/01/2023. Right? I'm watching 419.16. If buyers can show up like they did yesterday, despite the bearish structure, defending end of day, I'm looking for long plays, targeting 420.56, right? 422.98, and then 424.60, right? So my targets here are 420.56, right? Let me just map those out. And I'm literally grabbing these, right, guys, from previous structure, 420.56. 422.98, which is this candle right here, and then we got 424.60, right, which was way up here. So I'm always pulling from previous price action, right? So this is my goal each and every single day, is to identify conditions of the market, right? This is a bullish scenario, right? And if buyers could defend these levels, I'm looking to play long, targeting previous price action, right? So see how I'm using structure to paint a story, right? And based on what happens at these levels, I'm then going to put on trades with low risk. That's what I try to do every single day. Understand structure, understand the story, and pull and extract money out of the market. This is what we call identifying market conditions and adapting to market conditions. Okay, so that was the plan right there. So let's break down a lower time frame. This was 11-1. Now, with that being said, right, I'm going, hey, let me whip out the 2-minute. So once again, we're going back to that aha moment. See, we're holding above 417.87 somewhat in pre-market, right? So once buyers defend 417.87, which was that daily level, that daily structure that we identified on the daily time frame, right? That was bearish market conditions. Anything above 417.87 is going to paint a bullish day, right? And I want to trade with buyers at this point. So I'm not just going to go long. I need to see some sort of aha moment, some sort of large money taking control of this level, right? This is what we call a chart pattern in a zone, right? Because chart patterns, right, are bank behavior. Chart patterns represent human behavior, and whatever happens at these levels via chart pattern is going to paint the story, and then we're going to put on risk, right? So you can see that level was defended strong in pre-market, right? That gives it significance. Now we get pre-market high, and now we've identified open print. So open print, the first price, once the day opens, is always a critical level. It's always going to be it's going to have importance. It's going to be significant, because whatever happens at this level, not immediately, but whoever defends this level is going to hold conditions for the day, right? So as open print opens, I'm going, okay, I'm bullish on the day because we're holding above 417.87. What do I need to see to play this long with my upside targets of 420.56 and then 422.55, right? So basically, in a nutshell, I'm super bearish at this point, but I'm not going short because we're above 417.87. Then buyers defend open print, right? This is our first aha moment. This is our first a moment of awareness where we're going, okay, it looked bearish, but now buyers are defending, okay? This is critical. You must be able to see this. If you're able to identify this, you're able to make money, right? Buyers defended it. Do we just take the market long? Absolutely not. I need to see retest. I need to see confirmation. I need to see that large money likes this level, and I want to see a retest here. And the retest is going to really paint the picture, because the retest is literally a graphical presentation of sellers stomping out of their trades, right? So you have people going short here. Once price rallies above it and comes down for this retest, I want to see those shorts get stomped out. So this is the trade we called out in the Discord, right? You can see price. This is the retest of open print. Open print, like if you watch any of my other videos, is extremely important, right? We get sellers at open print. Now we're getting buyers. This is when we first took the market long. And now, guys, it is literally targets to the upside, right? So once again, really understand, guys, how that 417.87 level that we identified on the larger time frame, right? The structure, the bearish structure being invalidated on a larger time frame, painting a picture for us to now look for bullish chart patterns off open print, even though it was bearish, right? And then when the day started off, sellers defended it. We don't just act, we understand the story, right? And now the story was bullish, and now we're looking for a reason to go long, right? So that is what I call the aha moment. Price rallies, comes down for a beautiful, beautiful retest, and then we took the market long and caught a beautiful trade all the way up to 421.60, right? And now, Josh, how did you know to get out of the trade then, right? Let's break it down. It's all structure, guys. So once again, bring it back to that information you learned when you were a beginning trader. Higher highs, higher lows. Lower highs, lower lows. This is what tells us who's in control of the market, right? Uptrend, higher high, higher low. Low trend, lower high, lower low, right? So as price is rallying and you're hitting your target, right? First target hit, 420.56. Now we're rallying. Our next target's way up here at 422.55, right? Now, I need to see bullish structure remain. If bullish structure holds, I stay in the trade. If it doesn't hold, I get out of the trade. You can see price rallies, breaks resistance, then we get met and resistance comes in, and then we break above it, and then once again we create structure at the high of that candle, and then price breaks below it. Right? So guys, that is how we were able to identify the trade. That's how we were able to identify market conditions and adapt to them. Right? So I hope you guys enjoyed this lesson. Hit a like, subscribe for more content, and guys, if you want to get involved with a winning team, hit the links below. I'm Joshua Salvetti. I'll see you in the next one.